Hello students, I would like to welcome you all to this video. In this video today we are going to learn about the business documents. So I normally tell my students that business documents are very important in the business because the business documents, they serve as an evidence for business transactions. So whenever any transaction that being an accountant done in the business, so we record any transactions. If someone asks us, why did you record this transaction, from where this invoice comes from, or so how much amount that is, why did you enter this amount in the transaction, so we'll have an evidence of that transaction, and that will be in the form of business documents. So there are very important documents that is in our syllabus. So the main documents that we have in O-levels and IGCSE, the number one is receipt. So a receipt is the document that we have on cash transactions. So let's suppose if we'll go for a shopping in the supermarket, so we purchase some items, we come to the counter, and we the teller or the cashier, he makes the bill for us, and we'll make the payment, and there is a receipt comes out from the till. So if you read out that document, it's written on top that it's a receipt document. So it's on the cash transactions. So who gonna issue this receipt? This document is issued by supplier always, obviously, because they have the right to issue this document, so they make this sales, so they're issued by the supplier to the customers. So and supplier will record cash sales entry, cash sales transaction in cash book. And on the other hand, the customer who received this document will record the cash purchase as a transaction in cash book. So the cash book is our one of the books of prime entry. So after business documents, we record the transaction in the day books, and then we'll transfer this day books data into the T accounts, into the ledger accounts. So in the next video, in the next chapter, we'll learn about the day books. So this was the first document, is the receipt. It's on cash transactions issued by supplier to customer. So the supplier will record cash sales transaction in the cash book, and customer will record cash purchases transaction in the cash book. So the second document that we have is an important document, is called invoice. So invoice is a bill, or is a document that we have on credit transactions. If someone purchases any products or anything on credit, so we give this document to the customer. So we have, if you have witnessed somewhere, like most of the institutes, whenever they collect a fee, they made a carbon copy of it. So they make a duplicate of that document. So the one document they give to the customer, and second document they kept for themselves. So similarly, I explained to my students that invoice has two faces or two documents. The first document, that is from the supplier perspective, obviously, so we named it the sales invoice. So sales invoice is from the supplier perspective. So sales invoice, who's gonna issue that? So sales invoice is on credit sales transactions. So it's on credit sales transactions. So issued by, this document will issued by supplier to its credit customers. So similarly with the receipt, the sales invoice will be issued by the supplier to its customer, but it's on a credit transaction. That's an important thing here. That's the main difference with the receipt and invoice. So and on the other hand, obviously, once they will issue this, they will record the entry. So the supplier will record credit sales transaction in the sales journal or daybook. So we name the journal and the daybook. So some of the books they write down sales daybook, so some of the books they use the sales journal. So that's why I mentioned both of them here. So that's from the perspective of the supplier. So the other perspective that we have is purchase invoice. So it's the same document as I have told you guys earlier. So it's only from the purchaser, mean customer's perspective. So again, purchase invoice issued by supplier. It doesn't mean that it's going to be issued by a customer. So it's issued by supplier to customer. So now the customer received the purchase invoice. So the customer will record credit purchase transaction in the purchase journal or daybook. So that's where they record this transaction. And the sales invoice and the purchase invoice is the same document. So only thing is the difference, it's in relation with the credit sales, and it's from the supplier's perspective, and it's with the credit purchases, and it's with the customer's perspective. So the next document that we have is called debit note. So I'll write down here debit note. So once I'm going to explain this to you guys, I will tell you that if we are going to being a customer, if we receive some faulty goods, so we are going to return these goods to the supplier. So once the customer is going to return some goods to the supplier, he write a request note. So that note is going to be has the details of the goods that we receive, the damaged goods, and we would like to return them, and what's their the amount and the quantity and all the details relating to that product that we are going to return. So that debit note is just a request. So it's totally depend on the supplier. I must say that either he is going to accept the faulty goods or he is going to reject the faulty goods. So some of the business, they do have a policy to accept the returns, and some of the business, they do not have a policy, or they may check before accepting any returns. So debit note is the document, is the request document actually. So I'm going to explain this like in this way. So the debit note is a request document that issued by customer to supplier along with faulty goods or items. So it's just a request document, so that's why we don't know either it's going to be accepted or it's going to be rejected. So in accounting, we do not record any entries, so no entry will be recorded with this transaction. So we only need to know that this document is the document that is going to be issued by customers once they receive any faulty goods, and they are going to make request to our suppliers to accept these faulty goods. So once the supplier, they accept this debit note, so they issue the credit note. That's the next document that we have in our syllabus. So the credit note is issued by supplier again to customers after accepting debit note, means the faulty goods. So it again has the two copies, and one copy will be given to the customer and one copy will be kept with the supplier. So the supplier will record credit sales return entries, so they will record the sales return transactions, sales return transaction in sales return journal or daybook. So the supplier will record the sales return transaction, and on the other hand the customer will record purchase return transaction in purchase return journal or daybook. So that's the most important document that we have, credit note. So we always remember that any single return transaction, either it's a sales return or it's a purchase return, the evidence of that transaction is in the credit note. So the next document that we have is cheque counterfoil. So counterfoil, we know that there is a check that we usually made to make some payment to anyone. So if we have seen a checkbook, so there is a piece of paper that is left with the checkbook, a small piece of paper. So that's called the cheque counterfoil. What it is for? So it's an evidence. Cheque counterfoil is an evidence of check payment. So it contains the information about the check. Means we issue the check to whom and how much amount and what was the date, if there is some purpose that we want to keep, and how much is the amount that is left over in our bank account. So these are different banks, they do have different information on it. So it's the information is to record so who's issuing this check. So check issued the customer. So we record the customer record from this counterfoil, because the checkbook is the document of customer, because customer makes a payment. So customer will record check payment, mean the bank payment entry, payment transaction in cash book. And once they receive the check, so supplier will receive the check, so supplier will record the bank or check receive entry, transaction in cash book. So that's the document. So he will record this entry in the cash book by having the check. So counterfoil is kept with the customer and the check will be the supplier document. So the last document that we have in our syllabus is statement of account. I tell to my student that it is similar with the bank statement. So like after a month, supplier issue this document that contains all the information of the transaction of that particular period, for a month. So it's issued by supplier to customer, containing all the information about the transaction of a relevant period. So the purpose of this document is to reconcile or double check the balance owing at the end of that particular date. So if there are any errors, so they can consult back, so they can rectify that and reconcile the balances. And also there is another purpose, is to request the payment. So that is another purpose of this the statement of account document. So in this document we do not record any entry, so no entry will be recorded. So this is what we have in the business documents. So these are the documents that we have in O-levels and IGCSE syllabus. So we have, it starts from the receipt, and then we have invoice, we have debit note, we have credit note, and we have cheque, counterfoil, and the statement of account. That's the last thing that we have here. So that's in this today's video. So in the next video I'm going to explain about the business daybooks and journals. How do we make it? So if you guys have any question or any comments, so you can ask in the comments. So thank you very much.